Hey everyone, welcome to another episode of the Adventures of a Real Estate Investor. I'm Susie.
And I'm Michael, and we're excited you joined us for this adventure.
So today we have another super exciting guest from GoBundance. I'm super excited to have Leslie Ann Morris on with us today. Thank you so much for joining us.
Thank you both for having me.
Yeah, I'm super excited. I know I've mentioned this before, but it's cool to show the power that women are having and just performing in real estate whatsoever, because more often than not, you're seeing men all over conferences, all over podcasts in general. So I'm excited to bring another one of my women on with us. So again, thank you, thank you, thank you, thank you. Yeah.
Jazz hands.
Well, Leslie, and so obviously Susie knows a lot about you. I want to know more, and our listeners want to know more about you. Would you mind sharing with us a little bit more about your background, like why you started investing in real estate?
Sure, yeah. Well, my whole strategy now is moving away from helping people trading their time for money, right? That's kind of how we all start. I had a long career in commercial banking. I worked with really big names. At the pinnacle of my career, I even worked with SpaceX. So I had a magical journey. And as I was journeying through banking, I had a lot of underwriting and deal structure that I was doing for high net worth clients. And they all had, their Schedule E and their personal tax return for their personal real estate holdings. In some cases was like an inch or two thick. The thing was like a Bible, their taxes.
Wow.
So in getting those taxes in my early years and doing what's called spreads for US Bank, I was kind of mentored and coached by one of my customers. And at the time he had 300 properties. And I'm like, how did you go from buying your first deal to getting your 300? And so he kind of gave me some detail on that. And this was very early in my career. I was probably early 20s. And so fast forward to 2019, I was living and working in Los Angeles and just happened to see a report that the 10K report or whatever that had the salary earnings of the CEO of the company. And I just couldn't really see a clear path. It was really discouraging for me how I could go to being, senior vice president to someday making, in the C-suite, making that much money. So I went back to school. I got my master's degree. But before I even had started the master's, just my mindset immediately shifted. And I remembered those early conversations that I'd had. And I thought, I think this is the time that I start investing in real estate because I have that hunger and that drive. And so believe it or not, what I did is I robbed a retirement account and I just started stacking these properties in the Smoky Mountains really fast. And I was able to scale a portfolio, fairly sizable portfolio in just 3 years and then leave my banking job and create companies that kind of grew out of my needs that I had as a real estate investor. So it was very exciting and it's still very exciting. And I'm not looking back.
No, I love that.
Yeah.
And something that really stuck out to me is that you realized that there wasn't going to be progression, or even at the pace that you wanted, within your, 9 to 5 or W-2 or whatever, this relates to some person, but so many people are no, there's a spot for me up there. There is never a guarantee that there is a spot for you up there. If there is only 1 or 2 positions for that, and that individual or those 2 people are going to stay up there, for the next 30 years. Are you really going to wait 30 years to see, 1, if you're going to be in that company still, or 2, if the company will even exist? I would guess the third would be if they even choose you, because in that 30 years, there are going to be a lot of other people who come in and out of that company.
Yeah, no, totally. And I think, especially I'll get on my soapbox of women's empowerment, but a lot of times those jobs are handed to the men that are there. So then what do you do in that case? And yeah, it was just like what you said. It's nothing's guaranteed. You could get involved in investing and fail. You could stay in your company, be laid off. So it's follow your heart. That was a big motivator for me too, outside of the money. I'm very passionate about this. I have fun doing this. I like helping others do this. So that's been a driving force to just really, stay the course with it.
And I wanted to point out one thing that you mentioned in your background. You said you robbed a retirement account in order to start your real estate investing journey. Actually, Susie and I did that too. So yeah. Well, we realized another thing too was we did take some money out and then start kind of
All of it.
kickstart start kickstarting. And then we were wait a second, let's take it all out. And so we took it all out after that. And just because with a retirement account, everybody's different, but for us, for Susie and I, a retirement account we have no control over it, right? And with real estate, for us, for Susie and I, like we feel like we have complete control over it, right? Like we are purchasing it, we're underwriting the properties ourselves, we're purchasing the properties ourselves, and then to a degree, we are, asset managing those from cradle to grave, if you will, right? So we have complete control over how that money is being, or more control over it than versus just putting it out and letting your fund manager kind of lose your money. It was funny because, and I'll get to that. My point here in a second is like, one of my buddies messaged me the other day. He's like really getting into real estate. And he's like, yeah, my retirement account manager really did his job last year and lost all my money, right? Or half of my money, right? So it's like, and a lot of people are feeling that right now. And it's really difficult, like for the people who lost money at the end of last year, as the stock market kind of came down and everything kind of started collapsing and stuff like that, it's hard to show people like, hey, you need to, and maybe you can help answer this question. I guess the question I'm asking is like, what do you tell people, hey, let's get into real estate, get your money out of Wall Street and into Main Street. Like, what do you tell those people after they've lost so much in the stock market? Hey, you know what? Pull some money out and fund your real estate adventure, or maybe not pull money out, but put other money towards a real estate investor because it's going to be better for you.
Yeah. Well, I mean, I think I kind of started telling the story several months ago. Like, this is how I started. I robbed this retirement. Maybe that's not for everybody. And I had one of my mentors be like, well, the honest truth with that is you actually took your money out of something that's not guaranteed and put it into a long-term wealth building strategy, which is real estate. So did you really rob it, or did you just put it into a different investment vehicle? But if anybody's interested to learn more about like different ways to think about how to use retirement. I know we're all really fearful. We're like, don't take your money out of your 401k. Like that could be a really bad day for you because you have to pay tax penalties and this and that. But I was at a closed session with Tom Wheelwright, and he is a CPA and advisor to Robert Kiyosaki. And he said a lot of things that really like unleashed my mindset on it. So I won't quote anything that he said because he's the man, but Google Tom Wheelwright and just take a look at like what he said in regards to 401k. And, that money is not guaranteed to be there. And there's different ways you could move it. I mean, you can just withdraw it, or you could do like a self-directed IRA. There's so many options, but it's just all about like what feels good to you, and what ignites that like spark of, I'm going to take the money and go buy that. And that's exciting to me. And oh, by the way, it's going to help me be wealthy when I retire. Absolutely. Matter of opinion, I guess, on how to get into that type of a strategy around investing.
Absolutely. I appreciate that information, that insight.
So then what strategy did you choose to like go into with your 401k?
Well, I did a couple of things. So really early on, the retirement account that I robbed was just an IRA. I just cashed out an IRA. I did pay tax penalties on it, but I was able to take, I believe it was like 50 or 60,000. And at that time, the properties I'm buying were, 300 grand, 250 grand. So I was able to get 2 deals under my belt within like 60 days. So it was a really fast investing strategy. And then later on down the line, I ended up doing a self-directed IRA with 401k money. So all of, because I don't have a W-2 job anymore, all of that old 401k money is in a self-directed IRA. And with that strategy, I am investing in women-led multifamily syndications passively. That's the strategy I use for that pool of money. But going back to the conversation about Tom Wheelwright, he's almost saying that's not the smartest way to do that, that you might actually want to just cash the 401k out because there's a tax benefit, and I'm not giving legal or tax, any kind of advice. Just from my own investing experience, you lose out. You only get one tax benefit to each strategy. So if you are using the self-directed IRA, the strategy there is, the tax deferred contribution. That's your strategy. So with passive syndications, there is a further, like, you're going to get a K1 with a loss on it technically each year, and ask your CPA about this. But those two tax benefits negate one another. So you're only going to get the tax benefit from the money that you contributed being tax-free. There's lots of different ways to structure it, lots of different types of self-directed IRAs, different strategies, but that's just, I learned that later after I was already invested in that. So like, I'm happy with that pool of money and where that's headed, but in the future, if I have anything else, then I probably will just keep it liquid. Yeah.
Love that. Yeah, I didn't know. I mean, I knew there are some tax benefits and tax pitfalls, if you will, from using like a self-directed IRA and things like that. And yeah, as Leslie was mentioning, like please check with your CPA.
Yeah.
They will be able to give you the best advice. But also, as she said, like read some of Tom Wheelwright's stuff. I mean, he has several books out there and has a really good information as well. I really enjoy his content and stuff like that. He's very, very knowledgeable in the tax system and in what to do with your money as well. So yeah, definitely check that out.
Yeah, I think the exciting thing is like this is just a different time. And we're in a different, are we in a recession or are we not in a recession? Like who knows?
Right.
But
Depends on
if
what coin you flip on.
mindset, there's different options. You don't have to always go with what your parents did.
Yeah.
Totally. Yeah. And even I know you mentioned it took you like 3 years, I think you said, to leave the position that you were in. What did you do to prepare yourself for that 3 years? Or why did it take you 3 years?
Yeah. Well, I was ready to leave right around the 18-month mark. That's when I had, scaled the portfolio pretty vastly. I couldn't even tell you how many like doors I had at that time, but the passive income was enough to basically cover my salary and then some by quite a lot. And what I had done though was personally, I had made a decision to sign like a contract and leave one bank for another. So I was kind of trapped for a while and I didn't want to, negotiate my way out of that contract and have to give back a signing bonus, which I had used to buy a property. And I was like, I was not as busy at the time. So I guess I had the luxury of doing both things side by side. I only became very busy in the last 12 months when I have property management and property acquisition now side by side in the Smoky Mountains. So once I created that, then I was very, very busy. And within just a few months, I left. But I was scared. I mean, I think particularly with women, your career becomes somewhat of an identity. So I was dubbed a banker. I was obviously very good at it. They put me on the accounts of our largest clients and I was really confident. I would do a lot of speaking things for the bank and I knew pretty much every job in banking that I'd done over like basically a 23-year career. So the mind shift it took to leave that was one thing. I was a mentor for junior people in the bank. And then also I had a couple different mentors for myself. And so part of that was like, what's the legacy I'm going to leave behind? That was a big thing. And then financially, I think we all kind of get into that headspace of like, I'm an imposter. This can't quite possibly work. Maybe one day I'm going to lose everything I own. And I mean, you could. That's just life. But so I did a cash out refinance of one of my properties that had a lot of equity in it. And I just kind of took that cash and put it into its own account. And I call that my self-funded line of credit. So that was like my peace of mind. If anything happened and I, was missing that W-2 money, I would have that like in the back of my mind. I'd have that there. I already had a lot of cash reserves for other things. So it was like an additional thing. And then the other big thing was, we're all worried about medical benefits. And so I researched the heck out of that and ended up going with Cobra. I'm going to do Cobra for 18 months. And then after that, I have the names and contact information of some like healthcare insurance people that can help me put together my own plan. And, just meeting with my CPA about, what's this going to look like? What are the taxes going to look like? How's this going to be different for me? And I think really it was just the questions that I had, I made sure I had answers to those before I left. And once I had answers to those, I felt extremely empowered. And the only option was to just quit. That's what I did.
That's awesome. Thanks for sharing that. I'm sure that helps a lot of people kind of
Yeah.
figure out their path
Think it
as well,
through.
and think it through as well. If there's some listeners out there who are wanting to do the same thing, I do want to point out something that was hilarious that you said. You said I used the signing bonus to buy a property. And I was thinking, I was like, well, the job that you just got, you're using the signing bonus to build wealth to leave that job in the future. And it's like they shot themselves in the foot.
Yeah.
But
Yeah.
to connect that dot there, that was pretty cool.
Well, because I was like, I had the ability to pay that back and leave, but I didn't want to.
Yeah.
So it was like, I want to keep the cash for real estate. I don't want to give cash away,
Right,
So it
yeah.
was like,
You want to make money on the money, right? Not just give it back, right? So yeah.
and I tried to negotiate my way out of that multiple times and was told I couldn't. And then we really read like the fine print and I was able to leave a little bit earlier than I originally thought. But I worked at that company for 2 years, and it was a phenomenal company with amazing people. It was really hard to leave. I was already building a name for myself there. I had close quarters with the CFO right away because I was still working on my master's when I went there. So they really took really good care of me. And I still have a lot of close friends that work there. I'm like, hey, work on your real estate license so I can hire you.
That's awesome.
Yeah. But if I didn't have that like long career in banking, I would probably not be as strong of an investor as I am because I know underwriting. Like I'm do coaching, and that's probably one of the biggest things. You can Google equations on how to underwrite deals, but at the end of the day, everybody's like, what the hell is a cap rate? I'm like, I still don't know. It's totally made up. But
Right?
if that's what it is, it is true. Like we still have no idea. Neither do the appraisers. But no, it's really fun too because then I'm able to be like, this is so easy. Like I've taught children to do it.
Oh, that's cool.
Like it's that easy to really understand like where numbers flow from and what you're looking for as far as like to make profit. So I always try to teach that like really early on. That's even like before like what market you're going to buy in, because once you learn that, you can take that anywhere on, any type of deal and just feel empowered to get it done.
Yeah. So, two things I want to point out into that is one, you hit on the importance of underwriting. And I think it's really important to talk about in this call because we've met some people who outsource their underwriting. And I think it's like really, really important for you to understand the numbers so that you kind of cannot ever shoot yourself in the foot. Like, yes, there are a variety of reasons you can do that, but like being able to underwrite or at least understand underwriting is a big deal. Like you want to be able to see a spreadsheet and decide if it's a good deal for you, like on your own. But then something else I want to point out is that you did say like you teach children. So to put that in mind, like underwriting, if you sit down and really just like focus on it, like you really can get it. Yes. Like when you have 400 things going on in the back of your mind and you're like, well, I have to respond to this email and I don't have time to do this right now. It's hard, but anything is hard when you go at it in that direction. It's like really taking the time to like understand the numbers will also give you a lot of empowerment, like man or woman, right? Because you're like, okay, yes, like this is a good deal. And I know it is because I understand these numbers and I'm ready to move forward. Where if you don't really know, then you're always going to be uneasy. And why would you want to ever go into a deal like from the beginning being uneasy?
Yeah, no, exactly. And I mean, a lot of like, I don't know what their titles are. People like me that are coaching or whatever, they have like these crazy spreadsheets that have like, first year, second year, third year, fourth year, fifth year, like here's this scenario, here's that. So it can be like really daunting and overwhelming. So to just like peel those layers back and really understand, like at the end of the day, what do you really care about? It's so for me, I'm heavily invested in short-term rentals. So I really care about net operating income, which is a component of cash on cash. So my year one cash, whether that be my down payment, my closing costs, maybe I need to put carpet, paint, furniture, whatever the hell it is, just your actual like dollars and cents out of your personal pocket, not your mortgage, making sure that for every dollar you put in that deal, you're making X percentage back. Some people are down in the 10% range. I like to be 20 or higher. Anything, if you're getting 4% or less, then you really need to analyze your strategy because then you could just buy T-bills and have a guaranteed, they're at 4%, I think right now. And then you think about the strategy too. Like another way to look at that if your cash on cash is a little bit lower is like, I had a client that was buying a property that was close to $1 million. And I'm like, if you're not going to be able to walk away with like $1,000 in your pocket a month, why would you even do it? Like that's such a large mortgage to not have that making 12 grand a month or whatever it is. But in most cases, we're making a lot more than that on the deals that I'm underwriting, but that's like your worst case scenario where you want to be. And then it depends on like individual investor strategy too. Like maybe they are looking for a tax write-off. They're not as worried about that like immediate cash flow. They really want just like to be in a specific location. Maybe it's like a vacation home for their family too. And, they're like, okay, I'm going to focus more on appreciation, which I'm in the Smoky Mountains. We're at about 6%, although this year it's forecasted to be under 1%. But, there's a lot of different strategies too. So you just want to make sure you're not losing. If that's your strategy, you don't want to lose money because that's silly. Why would you do that? Unless you're just like making this crazy emotional investing decision, which I've done. but I still make sure that I'm hitting my metrics. But in my early days, it was just like I felt like anything I bought, it would just like do so awesome. I was invested at the right time. So very minimal. I'm like, oh, crunch the number on a napkin. It works. Boom.
Yeah, and something I think there is to remember in what you just said is that like there are a lot of different strategies. So like when you're on the internet or even Facebook, I guess is the greatest example, and you see these people closing on all these properties, it can be because they do not have the same investment strategy as you. And like when you can't get the numbers to work, but someone else did, it's because they have a different investing strategy than you do. And that is totally okay. Like we are all doing this for different reasons. And so somebody will get it, but then there will be a day where you get it as well. And so it makes, and I guess in a weird way, it makes the FOMO go away because when you aren't worrying about how many deals everybody else is getting, like it makes it much easier to move past deals where the numbers aren't right? Because you can easily manipulate any sort of underwriting to make the numbers perfect, but don't do that just to get a deal.
Yeah, no, I have a lot of like my buyer clients because I do work as an agent and they'll be like, well, on that property, what am I going to make? And I'm like, well, what's your interest rate? How much cash are you putting down? Like, is there a value add you can do with the property itself? Could you increase the number of beds to increase your what we call ADR and short-term rentals? It's the average daily rate. Is that coming into play? Because we don't have lease agreements. So it's kind of in like you could estimate it's going to make $500,000 a year and your underwriting's going to work. So you have to be really careful too when you get into those deals. But yeah, and the FOMO is real though when somebody picks up a snazzy property and you're like, oh, how do they do that? I want that.
Yeah.
So
Yeah.
yeah, just stick to your strategy, but also be realistic too. Like I do have clients that they're so conservative, they don't want to take a chance on anything. Sometimes you have to leap and take a chance and not let fear drive your decision. So that is like a real problem for people. They'll be so conservative in their underwriting and have like every little additional benchmark. I mean, like on my last deal that I took down in December, I did not include any kind of reserve for maintenance capex simply because the property was built in 2022. It was built just months before I bought it. And it still has the original builder warranty. So I'm like, why would I'm not going to do that. It's got all brand new furniture. And so I took that component out of mine. I think on that deal, I was like at 23 or 24% cash on cash. So I'm really happy with those numbers. Alternatively, if you're buying something that was built in the early 2000s, like a lot of the cabins in this area are, you're going to have to put in some sort of cost estimate for that, especially if you already know based on the home inspection that it's going to need HVAC or it's going to need a hot water heater. I mean, those items aren't crazy expensive, but it could blow your year out of total proportion. So
Yeah,
That
totally
would be a
agree.
bummer.
Yeah, absolutely.
What?
So you say you invest mostly in the Smokies, right? Or exclusively there?
Yes. Yeah. At one time, I had short-term rentals in 3 states.
Okay.
I was testing different markets, but when I began investing, I was investing in Smoky Mountains. I was living in Los Angeles. I was looking at Palm Springs. I was looking at Big Bear, those types of markets there. And I just couldn't, for me, I was like over my budget. I had like 50, 60 grand when I started. So I discovered the Smoky Mountains just through doing my own Google searching. And I was pretty active on Bigger Pockets. I'm still active on there today. And, found a lot of people talking about it. And I was like, well, what the heck is this about? So I took a look and I was like, wow, the price per square foot's really good. It seemed like people really love the area. And so I just kind of just bought my first one sight unseen. And then later after I closed on it, I did fly out to see it. And then I just fell in love with the area. And just a few months later, I got to Charlotte, North Carolina. I lived there for a while. That was like a bank transfer. And then I ended up in Tennessee in 2020.
Gotcha.
So I just, and then I reanalyzed the other short-term rentals I had, and I felt like they were making money, they were performing, but they were spreading me thin, because they were different markets with different teams I had to manage. And like in particular, Florida, I didn't really like obviously the insurance cost, and then the traveler avatar there was pretty poor. They were all coming to party. So I did 2 1031 exchanges last year and bought 2 more cabins. And so now I'm kind of all in the Smoky Mountain, and I love it.
Yeah, I've heard great things about Smoky Mountains just because it has pretty high occupancy year round. Despite the slow January February months, you still have people still like the vacation there, right? So yeah, just wanted one more thing about your company. I noticed you have a property management arm as well. Do you have a team that property manages? Do you do stuff on your own, or like how's that work?
Yeah, I created it's called Josh's Cabins, and Josh is, believe it or not, my ex-husband. It's gonna come out in a book in March. We started managing the properties together when we were still married. And then after our marriage ended, we were like, can we just keep doing this together? And so we did. And then I legally formed the company in, I think it was like mid last year. So mid 22, got licensed and insured. And now I've created 5 jobs and the entire team is women besides Josh. So it's very exciting. I know. And it's just been a labor of love. I kind of analyzed, what were the complaints, because I've been working as an agent. So I didn't really feel like I could, with good conscience, refer anybody anywhere. I was like, yeah, you kind of have to self-manage because all the companies are really poor. There was a few that where I had friends working there and I was like, yeah, like I could refer them, but there was always still some hiccups. That industry is, now that I've been in it and I'm onboarding a lot of clients, it's stressful industry. There's a lot of moving parts with it. I mean, you're not managing just tourism, like a mini hotel, but you're managing owners. It's this weird dynamic where you have 2 completely different client bases and just trying to bridge the gap in the middle, being like a middleman. It's crazy. It's a lot of work, but I do help people buy in the area and then I can either coach them on how to self-manage, but I really don't recommend self-managing. If you want to be a passive investor and you want to do it to scale the way that I did, you need to have a property manager or you're going to be quitting your job and starting a property management.
Totally agree with that. Well, Leslie Ann, it's been an absolute pleasure. I appreciate all the information. I appreciate the conversation thus far. We are moving towards the end of the show, which brings us to our adventurous 4. These are 4 exploratory questions we ask all of our guests. So we'll begin now if you're ready.
Yes, let's go.
All right. So the first question we have for you is, where is one place you wish to travel to and why?
Oh, wow. I've been all over the world. That's kind of what started my passion for vacation rentals. I've been to 45 countries, a lot of them twice. I'm dying to go back to Iceland. As soon as I have some spare time, I definitely will go there again. I always was looking at the Seychelles. So familiar with the Seychelles?
I recommend.
There's like granite rocks. It's phenomenal. It looks amazing. Oh, yeah. Okay.
Like somebody with a bag.
Yeah. I planned that trip literally 100 times. And for whatever reason, it was either, too expensive or, whatever the reason was, I have not gone yet.
I recommend it.
Yeah, we'll have to chat about that.
Yeah. Chat on plan. The
Yeah.
Crusoe Beach and everything like that. Yeah.
I like Mahe, Praisland. I know everything about it. Like I've been there, but I've not been.
Yeah.
That's very cool.
And we sailed around various different islands there too. Yeah. So we've been to those ones you just mentioned too. Yeah. Mahe and Praisland. Yes.
Oh, cool.
Yeah. Really cool. A lot of fun.
My second question is, what is one thing on your bucket list and how are you leveraging real estate investing to achieve it?
My bucket list thing is to create 1,000 women millionaires. I know it's like a personal mission of mine because I'm so fired up about women's empowerment. I want to be responsible in some way, shape, or form for touching their lives because that would create $1 billion in net worth for women. So how I'm doing it is through the creation of these 2 companies. I'm also writing a playbook that's going to come out hopefully this year. I've already been told by the publisher it might not, but on a passive investing strategy and how to do it to scale. And so every opportunity I get to speak or come on a podcast and talk about it, I'm hoping to light up some people's lives. That's pretty much, and I don't know, I guess I don't have a lot of personal bucket lists. I feel like I've lived a really full life. And I'm just really passionate about that.
Yeah, I love that.
That's awesome. Thanks for sharing that. So the third question we have for you is, what is one piece of advice for someone who wants to start passively investing in real estate?
I mean, you have to create the plan and take the action. Those are the 2 biggest things. And that's easy for me to say because I'm really self-motivated and driven. But you basically just need to get out there. You need to read as much as you can. You need to get the right team, lender and agent, property manager, preferably. If you have the idea, talk to somebody, try to find a mentor or coach that's done it. You don't have to recreate the wheel. I think a lot of people, me included in the beginning, think, oh, this is going to be so hard. I'm never going to know how to do it. And it's there's other people that have done it. You can just leverage their experience. And then the other big thing with taking action is I like to make a plan. Let's say it's a 90-day plan. And then I count backwards, 89, 88. And what are those daily micro actions that I need to put in place in order to achieve that plan in the right amount of time?
I love that.
I do too. That was great. Actually, thank you for sharing that because a lot of people take that away. And so I appreciate it.
Like put in the work.
Yeah.
Every day, 15 minutes.
There you
You
go.
got to ride your own butt.
It's
It
true.
compounds. Yeah. Over time.
But then our fourth and final question is if you had unlimited resources available to you, how would you leave an impact?
Oh, wow. That's a phenomenal question. I was like immediately like, I'm so selfish. I want to buy a lodge in Iceland. That's the first thing. I think I have to be like an Icelandic citizen, so that might not work. But unless I marry one.
I like that.
I don't know. I mean, something, if I was really going to get serious and do deep work around that question, it would definitely be something that helps lift up women. I'm like in my very early days, I've been really involved in martial arts. My dad is a sensei. And we would go into like women's shelters. Sometimes these would be women that had bruises on them or something. And they don't have any kind of self-confidence. There's no one to stand up for them and they're trapped in like a situation. So it would definitely combine something with that and the ability to help, empower these women to not only like put themselves first, love themselves, get themselves out of the situation, but also create some sort of passive wealth for them so that they can have a better quality of life. And that's kind of where I'm already headed. Around that strategy, just to lift others up in a way that, I would want done to me if I were in their shoes.
No, and it's super important, right? Because I mean, I've said this before, but just in real estate investing in general, like so many people do want to help other people, right? Because like we all deserve like our greatest life. And so if somebody is willing to help you get there, then let them help you get there because, that's a gift that they also want to give. So it's huge.
Yeah, exactly.
So before we end the show, Lizanne, would you mind sharing with our adventurous family how they can find out more about you?
Yeah, I'm really active on Instagram and my handle is at Leslie.Ann with an E.Morris. And then my website is leslieannmorris.com.
Well, thank you for joining us today. It truly was a pleasure. Like, I'm just so excited to be able to have this series on women. So thank you for being a part of it. Thank you.
Awesome. Well, until next time, explore more, adventure awaits.
Woo!